Welcome back. You're watching Money, 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 and this week we are discussing the various models of investment advisory that exists out there. How can you get the right advice that helps you make some money? Well, Abhishake, Robo advisory is something that you're also sort of looking at ICICI Securities. Now, it sounds quite curious. I mean, are we really talking about an algorithm making sense of everything and making sure I have a rich portfolio?
Yeah. So look, algorithms and technology has always been used in advice. There's huge amount of computation power which is available. You can quickly do, huge amount of simulations, etc. And you can make it available to retail customers also through web and mobile, etc.
And what sort of simulation models are these?
So essentially what you look at is how the markets, what you expect from the market. So that is essentially your expected rates and what is the volatility that you look at. And then you kind of predict it over a period of time to see how markets are going to perform with a specific kind of a cash outflows which are happening from a personal, from a client's portfolio. So that is where these concepts are used, and which is really the backbone of robo advisory.
I mean, from what I understand, that obviously there are certain data points that need to be fed in. Right. Your age, your profile, the amount of money, the corpus that obviously you're investing. Yes. Perhaps there'll be some way of measuring risk appetite. What I want to understand is that asset allocation, is it also done by this algorithm? Or is that something that takes place according to human intervention? So
asset allocation is the key to advice. Now what happens is that there are two models which are prevalent at this point of time. One is purely a psychometric based model where you give a list of questions to a client and understand his psychometric risk profile, and based on that you tag him to a specific allocation. That obviously has some issues.
And when you say psychometric, I mean these are big words.
So psychometric is that I will ask your profile on how you feel when the markets go down, what are your expectations from the market, how you felt when it went down, or if there's certain loss in your portfolio. So it's essentially how people are able to take losses, and that defines how aggressive you are in your outlook and how much risk can you take. The other model is going through an financial planning. Now in case of financial planning, you look at the customer's goal. So if I have a goal which is 10 years from now, obviously I can take far more risk. I can have a larger allocation into risky assets, so as to say, irrespective of what your age is.
Okay, so that's sort of an introduction to robo-advisory. We will take a break on that note and then get into more details. I mean, how much does it cost? And when it comes to cost, how much would you have to pay for regular advisory as opposed to robo-advisory? Some of the other details that you might want to keep in mind coming up after the break.